started. Hi Jan, okay, you got in, okay, that's good. Is this your first time, Jan? I'm assuming it is. Okay, okay, welcome. You're very welcome. The first thing we do is, and that's the essence in trading foreign exchange, and the key to successful trading in the foreign exchange is that we identify a currency that is basically strong, and we try to match it with other currencies that are weak. There is nothing in the world that's called the pound dollar, there is nothing that's called the Aussie dollar, there is nothing that's called the Euro CAD. These things do not exist physically. What exists is the rate of exchange between one and the other. Therefore, you are buying something that is strong and selling something that is weak, and the difference between those two is what is called the name of the currency. So the pound yen, for example, you're buying the pound and selling the yen, and that instrument that you see there is the difference or the spread between those two currencies. But there is no piece of paper that is called pound yen. In essence, so basically we try, if I'm going to do buy a transaction, I'm trying to find the strongest to be a buyer of and to find the weaker to sell. So we start by looking at the dollar, which is the granddaddy of all, and if we look at the weekly chart for the dollar, we can see that we have a major structural point, which is the 82.45. That is the major structural point. It is a beginning, one of the beginning points, the starting points of a new leg up in the uptrend. The dollar has been doing several breaks above structural points in order to reach the real trend changing point, which is the 89.09. And in that process of getting to this point, it is breaking one structural point after the other, and these are the ones that are highlighted. This is the first one at 80.42, and then you got the 81.16, and now we are coming above the third one, which is the 82.04. This is what you have there is the weekly chart. If you look at the daily chart, you see on the weekly we had a very good close. We closed the week at 82.42, which is above the structural point. That is a very positive close. We have a close which is a normal close that shows how the market should close on a Friday. So you had a kind of a profit taking, a little bit of profit taking towards the end of the week, which is a healthy close, and that would indicate continuation to the upside. So in that sense, we can consider the dollar as a strong currency, and it will be one of the currencies that we are looking to buy for the coming week. So we're going to put the dollar, and this is how we gauge the strength of the weakness. So the very strong currency or the powerful currency, we are going to give it 4 pluses or 3 pluses. That's an indication of its strength. The next currency we're going to look at, which was up till last week in a bull market, a strong bull market, was the Japanese yen. And if you look at this chart, you can see that one of our major structural points was the 125.70. And what happened last week, we actually did break below that structural point, and we have closed the week at 124.44. That is an indication that there has been a lot of selling coming into the Japanese yen, and now since it broke and closed the week below the 125.70, that would indicate continuation to the downside. And when we have a chart like this on a daily chart, and you can see that we had three consecutive days weakening, plus Friday looks quite impressive, because Friday has closed negative and has closed below the previous daily low, below this low of the big range day, and the big range day is a very significant event in the market. And then when we go and trade below that, and we close below that, and we have what is called as a normal close, that is an indication of continuation to the downside. So in this case, the yen now has turned into a selling point. And another thing that you want to look at this chart here is another interesting setup, and that setup is, if you look at this high right there, you see that that's a failure. I mean, if I bring the chart a little bit closer to each other, this is the third failure to make a higher high, and that after a big magnificent trend to the upside. So that was one failure, that was the second failure, but it hasn't, the big structure is over here, but this is the third failure, and we broke below it. My structure on that failure, on the last failure, the structural point is, let's see what it is, exactly on the lowest point would be around 125.39. So that last wave that failed to make a new higher high began, or the structure point of that is the 125.39. We broke through it with capitulation. We had the confirmation. The behavior of the price indicates that that is a point that the market truly identifies as a structural point, and thus you had the capitulation to follow, and we had a normal close. Therefore, having said that, we are going to go back and put the yen now as one of the currencies that we're looking to sell. So the Japanese yen is going to be actually a pretty negative currency, at least for this week. The major trend as a whole has begun to turn negative. And that, what you see here in the chart, is the beginning of the next leg to the downside, but the real bear market is going to begin upon a trade below the 118. This here is the major trend changing. This is when we can say that the Japanese yen will enter into a bear market. But right now we have a journey that can take us somewhere from the 124 level, probably towards the 121, if not. But at least we're going to get some continuation to the downside, because the market has realized now we're beginning to turn, the mood is beginning to turn and change to the downside. Okay, so the yen is going to be one of the currencies we're looking to sell this week. The next currency we're going to look at, and I'm taking in the order of sequence. I mean, there is no real sequence in what I'm doing. I'm taking them based upon the trades that we took last week. The next currency that I'm looking at is the Australian dollar. The Australian dollar is a unique currency, and it has some telltales that is going on around it. The Australian dollar, as you all know, is a reasonably strong currency because it pays dividend. I mean, it pays interest. You can get about 4% on your money. So there is some inherent demand coming into the Australian dollar. But if you look here, this is the index for the Aussie dollar, and this is based upon a basket of currencies versus the Australian dollar, and it is based upon what we call the future prices. So the traders in the market evaluate and anticipate a future value for the Australian dollar as a basket vis-a-vis all currencies. And you can see here the close is 99.96. So they say that going forward, the price of the Australian dollar would be around 99.96. If you look at the present value of the Australian dollar, the close of Friday, it has closed at 10050. This means it is more dearer, it is more expensive to buy the Australian dollar today than actually to buy it 3 months from now. If you buy and pay 10005 for it, and you store it and you pay interest on the money for buying the Australian dollar, because it costs you money, you pay interest rate, the value of the Australian dollar within the next 60 days or 90 days, because the next contract is September, you're actually going to be getting 99. You're losing about half, 50 pips on the trade. That is what we call an inverse market, an upside market. Because anything that you buy and store should have what is known as the basis cost, which is the cost of money and cost of carrying it. If you buy something and you store it, you should add to its present cost, and that will be the value going forward. So that is kind of an upside market. And if you look at the weekly chart, this is the daily chart. If you look at the weekly chart, you can see that that was the week closing on Friday last week, and that is a major sell signal. And technically it is kind of weak because we do have a minor structure at the 101.54. The high of the week was 101.42, which was the retracement from the 97.70, and we could not trade above the 101.54. That is an indication that it has moved from one structure point to the other. It has failed. The commitment to the upside thus far is not that strong, and therefore the market has reversed and sold off. So with that, we are going to continue with the Australian as negative, and it's going to be, let's say we're going to give it 2 negative points, not as weak as the Japanese yen. The Japanese yen has broken through a strike, so it is much weaker than the Japanese yen is actually much weaker than the Australian dollar. The next one we're going to look at is the British pound, and as you can see from the chart, the British pound is in La La Land now since 2009. It is in a one of those zones which is look like have a triangular zone, and this is usually it is a continuation that you will be looking for a further decline, because your guide is usually that original direction, that is the original momentum. So I'm looking for continuation to the downside, and you can see from the chart that it has been failing to make higher highs and it's failing to make lower lows. It has yet to break in one direction, so it is more or less range bound with a downward bias. So if you look at the daily chart for the British pound, again you can see the weakness. It has the same pattern, but again every move that is to the downside, and these are some of the typical price behaviors that the market begins to divulge its secrets or to give away its secrets by looking in which direction you have momentum, which direction you have high speed. And by looking at this chart, you can see that the high speed is always to the downside. The high speed is always, you get some fairly not as profound or as significant, and as you can see, look at these moves, big moves to the downside. And the high speed, it takes 1 or 2, 3 days to come down, where it took it a month to go up. That is an indication that there is more selling coming in and the bias is to the downside. So the pound is also negative, and I'm going to give it a same level of weakness as the Australian dollar. I'm going to give it a couple of dashes, so it's also weak. The next one we're going to look at, of course, is the euro. And this is now a very, I'm going to keep it squashed like this for a second, and then I'm going to widen the scope. As you see from this is like the upside down of the British pound. The chart of the British pound is like the upside down. This is going up, and now it's getting into this kind of a triangular, if you will. The British pound is on the other side. It is actually coming down, and you're getting into the triangle, into the upside, into the different direction. So if you look at this, the trend would have been originally to the upside, but right now we have entered into this kind of a triangle that is failing to make higher highs, and it's beginning to continue to make lower lows and breaking structure points on the way down. So we broke the latest structure point that we have from the latest failure to make a higher high, which again is the most significant at the time being, is the 125.93, and there is the other one which I'm trying to get it, which is, we have two structure points, one which is the 126.27 and the other one which is the 125.93. These are two layers of structure, two structure points, one on top of the other, with a close proximity of about 30 pips in between them. And this, when you have two structure points like that right next to each other, that indicates that it's as if you have a ceiling or a thick floor underneath you, something that a thick layer of concrete underneath you, which is one layer at the 126, and this is theoretically, if you can imagine a thick layer or a thick wall that you're standing. And what happened is we did penetrate below those two walls, and we closed the week at 125. The low of the week was 125.28, and we closed the week at around 125.72. This again is a negative close, and it is a good close that indicates continuation, because all what happened on Friday, you got some short covering buying. People are scared to go into the weekend with heavy open position. They don't know if the ECB or one of the meetings coming out of the G7 or something, they have come up with any idea or plan to wall up the market over the weekend. So what they do, people just like to be on the safe side, and the buying that came in isn't really any significant buying. So the euro is also going to be on a sell, and this we're going to give it 3 because it's below the 2 structure points, and this is how we grade them. If you have a big sell signal, then it's pretty weak. If you have a big buy signal, then you're fairly strong. And the dollar has a big buy signal, the euro has a big weak signal, and the same thing as the Japanese yen. Both of them has 2 big signals. The last 2 currencies we have is the Swiss franc, and this is a basket of currencies against the Swiss. And of course, as you can see from this chart, we are in a bear market with regards to the Swiss franc. We have bounced above the structure point, which is the 104.30, and we have come back and closed the week at 104.83. This is still above the 104.30, so we cannot be bearish on it. We are going to sell the hell out of the Swiss if it trades below the 104.30. Right now, this thing is neutral because the trend is to the downside. It's breaking below the structure, and I want it to come down. Once it breaks here, I'm going to get the resumption of this big move. But until it breaks below the 104.30, until it does that in its own timetable, then we're only going to be watching it. And we're going to be neutral about the Swiss. So for the Swiss, we're going to be neutral. So we're going to be taking each Swiss pair based upon its entry points on the daily chart according to those pairs. Last but not least is the Canadian. And as you look at the chart, this is the chart of the Canadian, not the dollar CAD. The dollar CAD is trending down. This is the Canadian dollar versus all the other currencies in the world, like the Australian dollar versus all the currencies in the world. It is still in an uptrend. It is in a neutral zone over here. It has been failing to continue in the direction of the trend, which is to the upside, and we do have a structural point, which is the 96.37. We are about 100 pips above that structural point, which we did break a few weeks ago, and then we came back above it. But it seems that this 96.37 is not, which was here. I mean, this is the point. That's why we can say that this is a major structure, is that the market hasn't been really responding. I mean, it has it has broken it many times here, and it hasn't broken to the downside. So I will leave it as there because this has been valid one time, but we are going to take the bear entry, if you will, from this last wave that failed, and that would be here, which is the 95.15, 95.20. Okay, so the CAD will also consider it kind of neutral to negative. So to wrap it up, so the CAD and the Swiss are neutral or to negative, so we can be, they will be the last one we're going to look at. But just quickly, let's take a look at the precious metals. You can see that gold has closed the week to the downside. So this means that money is coming out of gold. This means that money is coming out of the Australian dollar. Money is coming out of the Canadian because they are commodity currencies. If you look at silver, pretty much the same. Money is coming out of the precious metals. If you look at some of the grains, again, there is nothing happening in the grains. Corn, nothing following through. Oatmeal, oat is just, again, it's coming into the winter, so they use it to feed the animals. Bean oil, nothing. Let's see what the soybeans. So we're beginning to get some move in the soybeans and in the wheat, which might be kind of supportive to the US dollar, if you will. I mean, these are two commodities that are more, they have already been harvested out of Australia because the change of the season. So now going into the next season would be, the season will be looking at more towards the US dollar, should be favoring to the US dollar. So that confirms or adds to the discussion that we have discussed. So let's go and see what the plan now. So the plan now would be, we're looking to buy the dollar and we're going to sell the Japanese yen. So we're going to go long the dollar yen. We're going to go long the dollar euro. We're also going to go long the dollar Aussie. So we're selling the Aussie dollar. But in that sequence, yen, euro, Aussie, we'll also add to it the pound. So we're going to be buying the dollar, selling the yen, selling the euro, selling the Aussie, selling the pound. We can also add to it selling the Swiss, but we're going to look for good entries before I start selling the Swiss. I would be selling the pound first before I sell the Swiss, and then also the same thing with the CAD. On the other currencies, I can be looking at maybe doing some of the yen pairs. I would be selling the yen, so in this case I can be look at buying the CAD yen. I can also be looking at buying the Swiss yen, because this is just, we kind of negative to neutral, but this is actually bearish. Then we can come in, maybe look at the pound yen and the Aussie yen. Last but not least, we can look at the euro yen. So the plan is we're going to focus on the dollar, buying the dollar across the board, and then we're selling the yen across the board. And the first yen we're going to do would be the CAD yen, the Swiss yen, then the Aussie yen, and then the pound and the euro. Okay? That is about it. Let me save the recording.